Filter in class. Today we're going to talk shortly about SPACs, mergers, warrants, and if we trade them. So normally we have our normal stock. Okay, this is what we trade normally. But there's also different kinds of investment vehicles that we trade, and they differ a little bit from normal stocks that do a traditional IPO. Okay, so a traditional IPO is when the company wants to go public, they find investment bankers to basically invest in their company. They have to have a investment banker set up the deal, then they go public at whatever price they decide to go public at. That's your normal stock. Then we have SPACs, which are special acquisition companies. Now, we do trade SPACs. Usually only when they do in fact go public, and when I shouldn't say when they go public, but when SPACs actually merge. Okay, because SPACs, they're shell companies that are formed with the sole purpose to bring a private company public. Okay. Now, there's certain advantages to doing a SPAC, and they're actually become more popular. For one, they're quicker for private companies to go public than an IPO. Also, for the early investors, for the insiders, they're able to sell their shares right away, whereas an IPO, they're not able to. So special acquisition companies, they have a 2-year lifespan. They usually all trade at, not usually, they all trade at $10 until they merge. And when they merge, you're going to see a lot of volatility. And so that's when we sometimes trade SPACs. So they're totally tradable stocks. For example, here's two recent SPACs. And you can tell it's a SPAC because it will be trading at about $10. Okay, so $10, it merged. In this case, it dropped hard. So SPACs can be risky to invest in. You can get it. You basically invest in the shell company before it basically IPOs. You're basically able to get in before technically the IPO, kind of. And sometimes it works and sometimes it doesn't. Here's an example of it failing really hard. A lot of volatility after the merger, drops down to 4. So you would definitely lose money on that. Here's another SPAC trading at $10. We finally get a merger. They find a company, they acquire it, right? This AMBI at first was an acquisition company, like this one is. Here is a SPAC that hasn't merged yet. It's trading at $10. Okay, so you could invest in this acquisition corporation now for $10, and hopefully when they do merge, they have 2 years to merge. Hopefully, the stock goes above 10. As we see here with DTI, this is a recent one from June. Did not work out, but then this one in March, you go from 10 to 50. So we do trade SPACs when they merge because they can be volatile, and they generally trade like normal stocks. Granted, if they are low float, then it trades like any other low float. Could have a little bit more volatility. But just so you guys know what a SPAC is, if you guys see this and you're like, what's going on here with this? This was trading at $10 flat for 2 years. It's because it was a special acquisition company, shell company with no operations. They had investors fund this acquisition group with the sole purpose of acquiring a company, usually a private company. So these are SPACs. You'll know it's a SPAC because it'll be trading at $10, and then all of a sudden, if it's a successful merger, it will go completely volatile. So here's a SPAC that worked. Here's a SPAC that failed after the merger. And here's a SPAC that hasn't even merged yet. So I wouldn't necessarily invest in SPACs because it's really risky. As soon as they merge, it's either going to rip up or rip down. But I'm not an investor. We're day traders. Okay. So those are SPACs. Okay. And we had a SPAC, I think a couple days ago, and we did trade it. So those are tradable. These are tradable. Okay. Then you got traditional mergers. Now mergers, we don't really ever trade, and you'll know it's a merger right away. Why can't this go? Merger. I see. Mergers we don't really trade at all. You can't. because you'll see here in a second. Here's an example of a merger. This company merges with another, and during the merger, they decide what price they're going to buy out the company or buy out the shareholders. So the price is usually flatline like this. And so you'll see a stock in the gap scanner once in a while look like it's up 200%. Then you'll look at the chart and it's flatline like this. You're not going to day trade something like this. This is a merger. So mergers, no. SPACs, yes. Every once in a while, we'll have a warrant, which is a derivative of a stock. It's kind of like options. These we do trade not so often, but I have traded warrants, and you can make money when they start to move. Maybe it's on the gap scanner or whatever. And basically, a warrant is the sole purpose of giving the people who invest in it the right to buy at the exercise price or the strike price at the expiration date. So if the warrant price is lower than the stock price, then it's worth something. That means you have the right to buy it at the warrant price, and then you can sell it, or no, you can buy shares of that company at the warrant price, and hopefully the shares that you buy off the warrant price are lower than the stock price. So it's kind of like an option. Rarely do we ever trade warrants, but they are tradable. They tend to be a little bit less volume, so you can find that they are just a little bit all over the place. We had a warrant on the gap scanner today, VFSW, and we'll go to the 5 minute. So they sometimes really rip big. Sometimes they just sort of chop around. I would say overall warrants are tradable, and you'll know it's a warrant because it'll have an extra W at the end. Here's SEAT. W means it's the warrant of the SEAT stock. So VFSW, W is the warrant of VFS. So right now, the warrants haven't expired yet, but right now it would be profitable if it was at the exercise price, at the expiration date. But yeah, anyways, don't overthink it, guys. But just so you know what these extra W's mean, they're warrants. Yes, you can trade them, but rarely do I ever trade them. And honestly, I haven't seen a warrant really do amazingly well recently. So really, guys, stick to the normal stocks, stick to recent SPAC mergers that are doing well, but understand that SPAC recent mergers will be super volatile. So if you want to caution here on these kind of stocks, you'll know it's a SPAC because you'll look at the chart and see that it was trading at $10, and now all of a sudden it's really low or really high. So here's a couple examples of a SPAC trading at $10, then it merges, trading at $10, then it merges. So sometimes they can go well, sometimes not. But anyways, that's just a little bit on mergers and SPACs. Any questions, SC, about today, about anything? That was just a short lesson for future members, newer traders. They just so they know what's going on. You don't need to study up on SPACs and mergers. You don't need to know every detail about them. And I've been doing this for 3-4 years. Again, with almost $1.3 million in profits, and I don't even fully understand warrants and SPACs. I can identify them, and I know when I'm trading one, but it's not like I'm a master banker. So really, you're going to want to stick with the normal stock. The mergers, it's not going to take you very long to figure out that they're not worth trading because they'll just trade sideways. So red light on the mergers, caution light on warrants for sure, because warrants can be they can be duds, they can be unpredictable. And SPAC mergers, they're volatile, but I've traded a lot of SPACs in my time, even unknowingly. Now I know when I'm trading a SPAC, special acquisition company, and I only trade them when they in fact merge, because when they're just in their period of waiting, it trades at $10, and the company is not even a real company. It's just an acquisition group that has a bunch of money in a trust, and if they fail to merge, these acquisition companies, they just give the money back to the shareholder. So you don't lose anything, but you also sat there for 2 years and your money didn't do anything. So I don't know. SPACs are popular for various reasons, um, but anyway, I don't think I would invest in a SPAC uh, at $10 because it's like a flip of a coin. You could have DTI drop and lose 50% of your investment, or you can have it rip 500%. So you're basically, when you invest in a SPAC, which I never do, it's never part of the day trading strategy, but you essentially own shares of a company before it goes IPO, before it goes public. It's kind of that concept. A traditional IPO, the investment banker decides the price of the stock, and when it goes public, then you can trade it. And again, SPACs are popular for various reasons, but for one, it allows the like investors to sell their shares right away. Like the big investors, the insiders, they're able to sell right away. They don't have to wait the 90 days lockup period that normal IPO uh, uh, people have to follow. But anyways, where can you see if a stock is a SPAC, merger, etc.? So Jay, you'll know it's a SPAC. Say for example, a stock is up, 100% on the gap scanner, and you're like, okay, you will know it's a SPAC by going to the daily chart for one, and you will see that they all trade at $10. All these acquisition groups, they trade at $10 until the merger happens. So see how this was at $10. Now there was a little spike, but they always just come back to $10. And they may slowly grind up before the merger. For example, here's this one slowly grinded up. There was probably word of a merger, so the price came up a little bit, but $10. Here's another. No, that's acquisition. That's warrants. I had one. Oh no, this is a merger here. This is a merger. You'll know it's a merger because the price just shot up and then flatlined. There's no $10. There's no $10 thing. But here's a SPAC traded at $10. Here's the merger. Here's a SPAC traded at $10 and then a merger. So, you don't need to overthink it, guys. But just so you guys know what a SPAC is, it's a special acquisition company. I had one pulled up here that was a SPAC that hasn't merged yet, and what it would look like, it would just look like this. It would be like flatline basically. And then mergers, we don't really ever trade. Now, sometimes you do get a stock that puts out news of an anticipated merger in the future. And that anticipation, you can trade that anticipation. And so, for example, it's a $2 stock. The company puts out news or whatever that they're thinking about merging with another company. And then people can speculate, okay, maybe they'll merge at $5. Okay, so then in that case, you might have that kind of stock on the gap scanner where it's not right now merging, but there's news of a merger. When the merger already happened, it's not tradable. SPACs are tradable, but just understand they can really be all over the place. They're volatile. So opportunity, yes, definitely can trade them. I've traded a lot of SPACs in my day, but so you see what I'm saying, Jay? You'll know it's a SPAC if it was flatlined at $10. It'll look just like this. Just like this. That's a SPAC. And warrants, we rarely ever trade warrants. And again, if you're wondering if it's a warrant, you'll see an extra W at the end. In this case, it has two W's, probably because there's another stock that's VFSW, so they had to do WW. But the underlying stock is VFS. So I generally don't trade warrants. I stay away from warrants. And I definitely don't trade mergers because they don't do anything. I do trade SPACs, and they trade like any other stock when they merge, but they can be, they can be volatile, just like any penny stock. But anyways, that's the short lesson on this. Some of you guys probably already knew it. It's not like a life-changing thing you needed to know, but I know there's people who are like, what's going on with the stock? Why is it at $10 for 2 years? Well, it's because it was a special acquisition company with the sole purpose of merging with usually a private company to make it go public. And so it's just another way. It's another way for private companies to go public rather than an IPO. An IPO has certain benefits, but also disadvantages. SPACs have certain advantages, but also disadvantages. And as of recently, we've been seeing a lot more SPACs. And they claim that it's because of the pandemic. They say it helps mitigate risk. I don't know. I think it just comes down to when the big people, when the corporations, when these insiders or whatever, when they are able to do a SPAC, they make more money. I think that's the simple point. They're able to make more money. Their shares are not in lockup mode for 90 days, and they can, exercise warrants and stuff. But anyway, so I mean, on our gap scanner, I didn't trade any warrants today. I don't think BIOC was a SPAC. No, it doesn't look like this was a SPAC. This wasn't a SPAC. What else did we trade? PRZO wasn't a warrant. There's no W. Was this ever a SPAC? No, the PRZO was a recent IPO. Started at 4. So we didn't trade any warrants or SPACs today. I didn't, at least. But hopefully you guys are green. Again, if you guys want more information, you guys can look up these terms or a YouTube video. But I really want to. You don't need to spend much time on this lesson here. Just know of them. Know when you're trading them. But these are the main things. We have the normal stock. We have the SPACs. We have the mergers. We have the warrants. And there's probably a couple other investment vehicles that I'm not talking about. But primarily, this strategy has to do with normal stock. So anyways. That's all I wanted to say. If there's any questions, members now, members in the future, just leave a comment on the video. Of course, I'm still offering the one-on-ones. So, any more questions, I doubt that's going to be on SPACs or mergers, but whatever questions you guys had, I know a lot of members were not able to join in for this lesson. They usually watch it later. I'm surprised that we're getting 60, 70 views per class discussion. So that tells me you guys are watching this, hopefully learning. Yeah, it was a tough day. It was not great. The sub $2 stocks, I don't really enjoy trading them. They don't really have a lot of range. We traded Verb, VERB, and supposedly it was a low float, meaning below 20 million, below 30 million share float. They said online it was a 4 million share float, but I don't know. To me, it traded just like a high float stock. It would find a trend and then it would grind, and it was hard to read the time and sales. You'd see a rush of green and you'd be like, okay, this is it. And then it would flush, and and then it would come right back up. So to me, it was very similar to a high float. Very difficult. Then we had BIOC. It was decent, but lower price. I caught, I don't know, $1,200 off of there. But Jay, hopefully it's within your max loss rules. And that's what can kind of make a red day feel good, is if you were disciplined. Because the reality is, JSC or any day trader, you're going to be red eventually one day. I've had red weeks. I had a red week not too long ago. I think it was last week or 2 weeks ago. I had a red week. I've had red months. So the reality of this career is you're going to be red. So the point is, be good at being red. So hopefully, hopefully it's within max loss. I'm guilty of blowing through max loss here and there. I'm better than I used to be, but it happens. Verb. And somebody was like, "Oh, this doesn't trade like a high flow," and I'm like, "Yeah, I was trying to like see his point of view, and I was like watching him where I'm like, no, this trade's exactly like a higher float, like 100 million share float. In my experience, that's exactly how it traded, and which is why it was so difficult for me to read the level 2 and read the time and sales. I should have spent more time focusing on the chart, finding the trend. Uh, and I started to a little bit at the end, but it was hard because I'm very sensitive to the level 2 and the time and sales. And so when I see a big rush of red on the time and sales, or I see the price dip, I'm like, all right, get out, even though the trend is still bullish. So I'm red on Verb. Luckily, not as red as I was, but I was not able for the life of me to nail any good trade. I saw one good trade and I had my finger ready to go for 9,000 shares. I just hesitated, and it ended up being probably one of the best trades that I could have taken. Anyway. Yeah, Jay, and honestly, before I was profitable, I did not respect a max loss. I thought in my twisted head that once I become profitable, then I'll start following a max loss. I don't know how that made sense in my head, but I really didn't become profitable until I actually wrote down a max loss, a reasonable max loss, not like something where it's like, oh, if I lose this much, like maybe it would be like 3 times my daily average or whatever. I would make it too big. So make sure your max loss is not too big. Make sure it's about at where your average good days are. So if you're averaging on an average good day, you're making $10 max loss, maybe set it to $8 even, or whatever the case. But yeah, following a max loss every day, day in and day out, is fundamental in becoming profitable. It's so maybe for me, when I started, I had to forget about profits. I had to just work on following max loss. What that meant was there was some days where I took too risky of a trade, or I got in a flush, or I took too much size early on in the day. And within the first 5 minutes, I was at max loss. Now, when I was a beginner trader, I would keep trading. Why? Because, oh, it's only 5 minutes into the day. Oh, the stock is still ripping. Oh, this trader's still making money. And so in my mind, I would keep going. But I had to go through a period of time where my only job was to not lose more than my max loss. So, and you got to be patient with this stuff because this takes weeks, months for this to kind of sink into your muscle memory, your DNA, your discipline. And I will even go a month or two where I'm following my max loss to a T, and then a couple days I push it. Maybe I'm close to max loss, and I'm able to scrape my way out of it. I know Philly cheese. I know a lot of you early members. I mean, I don't do that behavior as much anymore, but there's a lot of days where I was at max loss. I take a huge trade, and I'm back up $3,000 on the day. Problem is, that's not always going to be the case. Eventually, there's going to come a time when you do that, and next thing you know, you've doubled, tripled your max loss, and then you're like, why? Why did I do that? So yeah, that's why discipline is so important. And honestly, I think people overlook it. They're like, yeah, discipline. Let me start making money and then I'll be disciplined. Let me start being profitable and then I'll respect the max loss. It's like, no. The discipline and the max loss and shutting down early, that's what's going to get you to profitability. You got to match it with the practice, right? You need the experience. That's why, I mean, at minimum 6 months till you start seeing like some serious progress. At the 1 year mark, we really want to start seeing you like scratching the surface at least. And then by the 1.5 year mark, you should be pretty close. Okay. But understand that some people are going to take 2 years or 2.5 years, and that's okay. But I think the main point is you got to be patient with this stuff. Got to stop chasing the money and start chasing the discipline. and then the money will follow. You stop chasing the money. That's what I had to do. How did I know I was chasing the money as a beginner trader? Because I was using too big of size, because I was trying to make $100 a day. I was trying to make money. I was trying so hard to make a lot of money. I would also, when I lost money, I would try so hard to make it back. Because again, I was chasing the money. I'm like, oh, I'm red. I'm at max loss. Let me keep going. No, that was a mistake. So that's how I knew I was chasing money. It wasn't until I stopped chasing the money. I started using smaller size so that I could at least minimize the losses and reduce the fear. And I followed a max loss to the T. Not perfectly, but to as well as I could to the T, even though it meant shutting down early and walking away. Sometimes that's what that meant. But I chose the discipline over chasing the profits. And then eventually you compound that discipline over time and you'll get there. Verb was that I have to be more. Do you set a stop loss or do you sell market? I don't do stop losses really at all, Jay. I don't. I have my finger on the sell button and I do mental stops primarily because there's a thing called stop hunting. What that means is there's market makers or algorithms or whatever's out there trading these stocks. They will see your stop order and they will stop you out. They will stop you out. And I tried to do the stop orders for a while, but what I realized is every time I set a stop order, it was like the market magically went to my stop, stopped me out, and then ripped right back up. So now I set mental stops. I don't recommend setting stops unless you want to set a stop and leave, set a reasonable stop and leave, but that's not something I do in my strategy. So yeah, virtually no stop losses for me. I just think you get stopped out more than you should, because it's a real thing called stop hunting. So Jay, just get used to getting in and then having your finger on the market out button. And for my dad, this was his problem. He would get into a trade, and mind you, my dad's almost 60, or maybe he is 60, I don't know. But his problem is he would get into a trade and then he would he would freeze, right? The trade was working, maybe it was going against him. He had profit, then he was red, and then he just wouldn't sell it. He would try to hold it. And I said, no, Dad, you got to get used to getting in and getting out, no matter what you see. And so I gave him a rule. I said, buy market. I said, for today, buy market in the places you want and the places you see that are good. And then count to 5 and then sell. I said, don't ever hold a trade more than for sure 2 minutes. And I said, if you hold a trade more than 2 minutes, you're doing it wrong. And so he's not a perfect trader now, but we were able to work out those large losses he was getting by getting stuck in trades and then freezing and then thinking, oh, I'll just hold it. There were times when holding it actually worked out for him. And that's a common mistake in trading, where you will make money on a bad high risk trade, and it reinforces that behavior. So with him, I had to set that rule. And maybe this is something that you guys need to do, is get used to the getting in and getting right back out no matter what. Maybe it rips higher, but just to get into that rhythm of just getting in and then getting out, taking your profit, waiting for a dip, hit the dip without hesitation. Hopefully you're not hitting it on like backside on a bear flag on a weak day. A lot of things have to align for these trades to be amazingly good. But anyways, that may be what you guys need to do. Some of you. And I get it, you guys, some of you guys have smaller accounts. And so the issue with that is you're limited on the amount of trades you can take. And psychologically, what that can do, at least it did for me, is you get into a trade and maybe your buying power is almost used up for the day, and you get into the trade and you don't want to cut it right away because you're like, well, I only can take 2 more trades. And so that was the case for me in my cash account 3 years ago. I had 12 grand at the time. And so I was like, and I was using 300 shares a trade. So that uses up quite a bit of buying power. So I was limited on my trades. And so I would get stuck into trades and I'm like, I need to at least make 80 bucks on this trade. I need to at least do well on this trade because I don't have many more trades. That's partly why lowering my share size worked well, because now I could take unlimited trades. You really want to get to the point in your trading account where you can take unlimited trades, whether that's with 5 shares or 100 shares or 1,000 shares. That's you need to have the ability to do that, especially with this scalping strategy, which I think is a very great strategy, uh, because you're getting in and you're getting right back out. I think it's actually lower stress than a lot of other trades where you have to hold it for an hour or days or weeks. And so when I did fund my account to 25K, that's what allowed me to scale up because I could take unlimited trades. So ideally, you want to get to a 25K, $26,000 trading account, because then you're over PDT, which is your pattern day trading rule. So you guys may not be having that issue, but I know that's an issue for a lot of traders. And my dad especially, he has a $10,000 account, cash account, and I don't know how many days. It's a lot of days where he's like, "Oh, I'm out of buying power. Oh, I wish I could take more trades." I'm like, "Dad, you need to fund your account up. You have the money. He has the money. He's just hesitating to get the 25K in there. And if he does it right, if he follows the correct path, he shouldn't lose. He's not going to lose 25K. If he loses 25K, he's veered off the road from the strategy, which is the learning strategy. The learning strategy is one, simulator, but then hopefully quickly real money, small size. For my stocks, it was 10 to 100 shares. That way, even if you screw up big time, you're not blowing up your account. Right? Slow and steady. Quick trades. I know some traders are like, "Oh, it's the one and done." And I'm like, I don't know. For the strategy that I do here with the free commissions, now, if you do have to pay commissions, that's one thing. This is it. This is the learning strategy, and this is what I got my dad on right now. So this is not a get rich quick. You're not going to get rich in 2 months. You're not going to get rich in 6 months. You're probably not going to get rich in a year, for sure. You're probably not going to make any money your first year of day trading. You got to have realistic expectations. That's what I think a lot of people struggle with when they come into this career. They come in with unrealistic expectation. They want to try to make a bunch of money now. Maybe they have bills to pay in a couple months, and they're like, I need to make this. And again, the problem with this sort of thinking is you're chasing the money. So stop chasing money. Stop chasing the money. Chase the discipline, meaning the rules. Rules. Etc. Okay, what are the rules? If you don't know the rules, then go back to the trading plan lesson, because those are the fundamental rules. When do you do one-on-ones? I do one-on-ones usually whenever, Jabe. So just contact me. and we can set up a time. I might have a little bit of time. I know later today I'm going to be busy, but I might be able to have a little bit of time, today, or if you want to do it sometime tomorrow or Sunday or Monday or any day, really. I will just set it up. If you have me on Discord, direct message me in Discord. If I fail to respond, because sometimes it doesn't show me notifications, and comment on basically any video you want. I will see you in there, and then we can set up a time. But anyway, yeah. So this lesson, what are we at? 37 minutes. I wanted it to be short, but anyways, normal stocks, SPACs, mergers, warrants. Now you guys know a little bit about them. Those are kind of the main four there that we trade, minus the merger. We don't really ever trade mergers. Never. SPACs, yes, when they finally do merge. Warrants, rare. Very rare we ever trade a warrant. So keep it simple, guys. Keep it simple. If you're red today, all I care about, basically, if you're red today, that doesn't really bother me. What would bother me is if you're red today and you're past your max loss. You blew past it, not being disciplined. Now, sometimes you get into a trade and for whatever reason you get absolutely obliterated. It was a good trade. You weren't at max loss yet. You weren't whatever. So sometimes you do just get screwed. So I understand that. But the main thing is you got to follow the rules. And even if you're red, you're red. But sorry, my sister walked in. So yeah, just stick your rules, because your rules will be a little bit different. But anyway, do you need something?
Up.
Okay. I'm in the middle of a class right now.
Oh, it's numbers.
This is a member class.
Oh, hi, Esty. Oh, wow.
Be gone. Anyway, so I should probably get going. I guess my sister just got back, but yeah. And if you did lose past your max loss, hopefully it's not gonna ruin. It should not ruin your net worth. It should not ruin. You need to, when you're learning, you need to be at a level where you don't care basically about the money because you're losing so little, and that way you can trade without the fear. You can start to trade the patterns you see without fear. But again, keep that goal in mind of taking that profit, ending green.